Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's March 17th. This will be our chart lesson for the day. And just quickly looking at the daily chart, you can see we're still way oversold here. We've had two decent rally days for a change. Today's rollover. We start rollover today, so it probably has something to do with it. But there was a lot less volatility and a lot less volume today. And my guess is it's probably because it's rollover day. So we might see a couple of days where um, the volatility subsides a little bit, and we may get some buying because people are rolling out of one contract and into another one. And so I guess what I'm saying is we may see a little bit slightly different price action than we've been seeing. And once kind of the rollover is over with, we could go back to the heavy selling and more of the same that we had before. But anyway, just be aware of that. It is rollover and it does change the market slightly sometimes. And so that's my guess is why the volatility is down some. But you can see we opened close higher. Um, Actually, I'll take that back. We opened lower from where we closed previous, and we traded down and then reversed and traded back up. My guess is they tried to fill. There's a gap. There was a gap on today's chart. They didn't quite fill it. I'll show that to you when we get over to the 2,000 tick chart. Usually prices will try to fill those gaps, but they weren't successful today, and that led to a pretty good afternoon rally. So that's not that's pretty much the norm. If they can't fill that gap and you because of a big rally, usually you'll get another rally up. So or down, depending on which direction you go. Let's flip over to the 2,000 tick chart, and we'll take a look at that and go through those trades. Okay, here it is, and we had this early leg up, and then we corrected, and we tried to fill the gap, which is down here, and notice we could not fill that. Um, Prices couldn't get past the opening prices again at 8:30, which is the yellow line here, and they really couldn't. They really just moved a measured move equal to the original channel up here. You can see that dashed blue line, and it looks like we hit that to the tick and reversed. Maybe we missed that by a tick. It looks like maybe we missed it by a tick. So not quite to the tick, but it's pretty dang close. And it really could depend on how accurate I drew the range. I mean, you could always be off a tick or two. Usually the way I like to draw it is I use the where you get the most touches, but you also get the closes. And so you see we got more touches along. Actually, we might have got a few more touches with this being slightly lower. That way we get three, and this one we kind of closed outside here. I think I got this one correct. We get the most touches and closes on that line across there. And then that does mean we at least got a measured move down to equal this. We actually went a tick or two further than a measured move. Um, and then this first leg up, we looked for a measured leg there. We didn't quite get it. We got really close. I mean, to me, that's close enough to say, hey, we probably got a measured move up. And then we corrected. We went into the 230 and corrected from there. But this played out. We got a close here. It wasn't much of one, but we did get a close outside and a new high. Two legs down and it tried, then two legs up, and then we trended down again. But most of that was all after 230. So there's how I saw the day. But let's zoom in here and we'll go through the trades. You don't see it up here. But there was a news item at 7:30 this morning. Where is the? I got it covered up. Oh yeah, you can't see it, but my little timer and all for my recording where I pause it or stop it or see the time was covering up the news events, and it's already fallen off the chart. I thought I'd fixed it where that wouldn't happen, but I guess I don't have it quite set up properly yet. I'll continue to go into the parameters, or not necessarily the parameters, but into the program itself and see if I can tweak it a little bit. I had that fixed one time before and I thought I'd fixed it again, but maybe it's been more than 8 hours. No. Hadn't been, well, it might have been more than 8 hours because if I started at 7 and I had it set up where it would go 8 hours, I believe. So anyway, I'll continue to work on that and see if I can tweak it. But you can see um, we had the news item, then we came out of that and we had a first entry, second entry, and confirmed that trend line. We really had already kind of confirmed it here, but I think you need this to double to be certain, I guess, not to be double certain, but just to be certain. Excuse my wording there, but you needed another touch just to be certain. And you get the second entry here, but there's no signal bar. You do get a close outside and a new low of that downtrend channel. So because you don't have a good setup, you got to wait on the higher low, which comes here. And these are equal uh, 2-bar matching lows. So you could use either one of those for the signal bar. So this one still qualifies as your higher low, and boom, off it goes. And that is a great setup. You'd get a easy, huge runner on that. I mean, that's the kind of trade you like to see. And I draw my trend line here, and I would say you probably got to close outside here. These other closes are, I think it just needs adjusting here, are actually inside or on it. So you got your break here, a couple legs to a new high, and it turns down. That's your signal bar, though it doesn't qualify. And this gives you your first real break. You probably wouldn't necessarily want to take a short here yet. You want to get a break of the main channel, even though you got a break in new high here. That's a pretty strong trend, so I'd sit tight and you get a break, move to a new high here, and you get a first entry, and then you make a lower high here, and when it breaks below that, that's a second entry short. And you did make a new high there, so I like going short there. You got a little space on the EMA. It's not a perfect setup, but I like it all the same. You could almost argue there's a triple test there. So I like that trade. It runs down and it bounces down here, gives you a close outside. It tries to make a new low and can't, and bounces. And so by that time, you've easily got a triple test here and you got a nice signal bar. I like going long there. Yeah, it's a big bar. It's 37 ticks. So you have to decide if you want to take that risk, how good a chart reader you are, and how much well you trust your reads. And you may want to skip that one because it is 37 ticks. But as far as the setup and meeting our criteria, that trade is, I like that trade. I like it a lot. But again, it is a big bar. And so I know there's been a lot of discussion on the YouTube channel with the trades I've taken, people that say you can't trade, you can't take that much risk, you got to go for that many ticks. I still am a firm believer that where you put your stop is way more important than where you than how far back your stop is. So it's just the way it is. And I mean, I'll show you over and over that if you put your stop where it goes, these trades take very little heat usually if they're good setups. That trade didn't take hardly any heat. This trade takes hardly any heat. Doesn't come anywhere near back here. But let's just say, assume that you wanted to go 1 for 1. Well, you got at least get that many. And guess what? If you try to go for a 1 for 1, I believe you get a loser there. But if you follow my rules, that's a winner. So there's you a perfect example of going 1 for 1 is not necessarily the right thing to do. And I can show you that over and over. If you went for 1 for 1, you couldn't take that trade unless you were going to be confident this was going to break higher. And it looks like a range. And you would have taken a loser going 1 for 1. And if you'd have done it my way and not worried about the 1 for 1, you'd had a winner and probably got a runner to boot. So, it's all in your head. It's been burned into your brain that you got this risk reward. Sure, if you're trying to swing trade every trade, yeah, maybe you do. Now you might have got 8 ticks there, but I'll show you some that you don't get 8 ticks. And if you follow the rules, you have a winner. I had a guy send me his chart, said I can't get a winner no matter what. And every trade I looked at he took, it would have been a winner if he'd have just went for 4 ticks like I teach him to. These trades are designed to get 4 ticks. We've got this down to a science. We know how many ticks you can get. It's 4. That's why we don't go for 5 or 3, because we know we can get 4 90% of the time. But people just cannot buy into that. And that's okay. If you don't want to be a scalper, you can't buy into it, keep beating your head against the wall and doing the wrong thing. And maybe you'll find something that works. Maybe you won't. I don't know. But I'm just telling you what works. So anyway, this thing runs up here and we turn down right off the key entry point. This is like a third entry. If you really wanted to go short there, I think you could. I didn't mark it, but you could mark that green. I think you need to wait on a little better entry because you do have this channel working up. There's plenty of room back here, and it is a triple test, but I like when you get a triple test right here. If you got a setup here, maybe you go short, but you really don't. But here you get a close outside. You don't quite get a new high, but we're in a range. And you get this big bearish bar. I like going short there. And it does make a little jar up in another move down here. But I don't think you can enter right there in the middle of the range. It would have worked, but this has moved too far for my taste to treat that like a lower high. So I think you wait. And you get a little failed breakout down here. Now you could have actually gone long right there, and it would have worked. You would have got your 4 ticks, just like I tell you most every time. But you're better off to wait on the higher low, and you end up making another lower low instead. And so once again, I think you could argue for it to be green, but I think you need a higher low just to be sure. This is closer to blue than this because look at what's the difference here. Before I say anything, look at it, see if you can determine the difference. Pause this thing and study this a minute if you can't see it instantly, and see if you can tell me what the difference is between this trade and this trade. Because most of you, all you're going to see is another break lower. Unless you understand what we're trying to do and you understand the rules. So pause it, see if you can figure out why this trade is less risky than this trade, and see if you can come up with an answer. But anyway, the reason is when you're coming down here, you're still in this channel. There's a little tight channel correcting down there. And here, you have not had a close outside and a new low yet, because that's what you expect to happen. On any trend, you expect to get a break and a new high first. That's what you're looking for. That's what you want to see. Here we waited and 2 more times. They couldn't go lower, so we like going long there. So just keep that in mind. So we're coming down here and we've got a failed breakout, which may, that far away from the MA, it's probably still going to get a scalp, but it could hit that trend line and turn down one more time. Or it could get a little break or close outside and then turn down, and you may not get your scalp. But anyway, I think it still warrants a green because it's a failed break lower, and we know what's going to happen. It's probably going to fail, even if only temporarily. But here you get your break, and you actually get a couple of swings down. It's a lot of sideways there too, but you can see there's a swing down. It tries to go back up and another swing down. So 2 swings to a new low. That's when it's usually going to reverse. So even though I marked that green, it's closer to red than this one is for that reason. So hopefully you got that right. If you didn't, study them and you'll start to get them right. Look here, we're moving up. We get a close outside, move to a new high. But we don't get a break lower there. It would have been a second entry short. It doesn't break lower till here, and now it looks too congested for my taste. So I'm going to skip that one. You get a lower high here, but you can't go short right into that previous support because what if it holds and goes higher? But it moves on down. Looks like you get, you really don't even get a close outside there. That closes back inside, so you're still moving down. You get a close outside, 2 swings to a new low. And you get another chance to maybe go long again. Now, I didn't mark this one because it looks congested and it was an engulfing bar. You have to wait for this bar to close. Don't trade that on the engulfing bar. If you're new here, just skip engulfing bars. Wait till they close because this broke lower and turned up. Wait till it closes. Don't try to sneak in early. Don't do any of that. And you could have gone long here, but we're so close to the EMA, and we might have a down. You see, we confirmed this downtrend here, and we might have a downtrend. And so you may be going long right into a midline where it turns lower again. So I'm just not crazy about that one. Again, you could probably argue for it to be green, but wait till it closes and go long one tick. And you see it would have worked. Wouldn't matter if you went for, well, let's just see how many ticks you could get. Wouldn't matter if you went for 4 ticks. You could have got 11 points on that trade. So, and that trade is actually, or that signal bar is actually 26. So that's almost 7-point bar again. So if you went 1 for 1, yeah, you'd probably got it there. But anyway, but if you went for 4, you got it. If you went for a runner, you might have got it there too. No, actually, you wouldn't have got that because the runner came back here. Would have got your runners. You would have got your 4 ticks, and if you tried to get a runner. But I usually don't. If I do try to get a runner, it's on a failed breakout like this. Well, you do get a higher high here, but you got to go long almost right into that trend line. And so I'm not crazy about that one. I think you have to wait. I think we're in a downtrend here. You can see we're making lower highs and lower lows now. And so you actually get a second entry short right here, but that's not, doesn't qualify, and then it turns back up, and so you get a lower high here. I like that as a lower high. Nice signal bar right at the key entry point. You've had a second entry, and now you get a double top, which you can treat as a lower high, and boom, off it goes. And this one runs all the way down. Again, you probably wouldn't have got a runner here. I probably wouldn't try with that support being right there and being a little congested, but it runs on down. Another easy scalp that takes little or no heat. It bounces down here. That looks like the low to me. Needs to be slightly higher. And you can see it working off the midline down through there on both sides. Gives you good, pretty much a lot of confidence that that's probably right. And it bounces. Notice you got a trend working down. It gets a higher, it gets a closeout side. It tries to make a new low and then gives you a higher low. Not back to the EMA yet. I like going long there, and you end up kind of getting a trend working up here. In the end, I mean, you could trade it like this. I think that's accurate, but I probably would have, if I had it to do over with, I probably would have just drawn it like this. And you get to close outside and 2 legs up. But you just basically get 2 legs up from that point. I think this is just sideways stuff before you start trending higher. But either way you drew it, you come out the same. I mean, they're both right. You get a break, new high, and you get a first entry, and then it turns back up again and gives you a second entry short right there. Technically, you went higher. You had a low here and then went higher and turned back down. So that's 2 legs down. So this is really a new low. So that's a first entry, second entry. And that's the first close outside. I like going short on that. I didn't mark it because of that support right there. And you see it almost bounced. But you could argue for that to be green. And if you took it, I probably wouldn't blame you too much because it's probably going to go lower, at least back to the EMA. You see it got back to the EMA. It tries to bounce, but it pushes on through. So, and we had just come off a perfect measured move down here. So there's a good chance we might work higher. It took a little bit, but it did. When we come down here, we get a close outside, a new low, and you get a higher low. But that's just too congested right into the EMA. I didn't like it. It would have worked before it turns and makes another leg down and then gives you a nice signal bar. Again, you're better off to wait on the higher low here. So I marked that green, and then your higher low came here. I marked that blue. And then guess what? You got a new swing low here. It's lower than that one. So twice you tried to go higher, or you got two legs up, so you got a second entry there that fails right off that trend line and then goes higher. Plus, you could say it's back into the support of the range. And so that's like a reversal or continuation pattern. You could look at it either way. So maybe you take that one too. It's not perfect, but that's probably going to trap shorts. And you can see how fast that shoots up. It definitely traps people. And it shoots on up there. Here it is again. You get another pullback. And this thing is off to the races now. You got to be careful going long here. You need a good setup, and you don't really get one. You have this here. And you could argue that that's a failed breakout that goes out the other side. There's not much room there, but you may not need it here because you got a pretty good rally. And you can see maybe there's just enough room there. So you could even argue there's enough room. I didn't mark it, but it's one of those that maybe you could take that. And then anything else that comes back to this trend line after that point that gives you a good signal bar, you just about could take it. So there's another one right here. That signal bar doesn't qualify. This is off the midline. You want to see it more off the main trend line. You got one here. You've got one here. And you have another one here, but it doesn't break higher for 2 bars, so you can't really take that one because this is just inside bars. And then you do get a close outside the new high. I wouldn't go short there into that trend line. But now you're working down, close outside new low. It doesn't break higher there. You finally get a higher low. It's an inside bar. And then you get a test here. The only problem with this is you got to go long right into the possible resistance. But so and it's so late, you can see it still works on a triple test. So it's another possibility, but you got to be careful when you're in a range and it's turning down off the highs and the lows. So, I mean, it's not consistent across there. It's possible that maybe even the resistance is up here and that's your midline. So, this actually needs to be slightly higher. So that's probably more accurate. Sometimes, it's easier to see it after the fact. When I drew this in real time, I saw it more like that. But looking at it after the fact, I think it's up here. And in that case, I like that being green even more. But it's almost 2:30. You don't want to make a mistake late in the day because you don't have any time to make it back. That's another one of my rules is don't take any trades after 2:30. And if it's right at 2:30, it needs to be a good setup. It needs to be what I call a sure thing. Now, I had that conversation, another conversation I had with a trader. He said, there's no such thing as sure things. It's all probability and you're just taking a chance. Well, I disagree. This is just my opinion. Take it with a grain of salt. Believe me if you want to believe me. Don't. I show you market geometry every day. There's no way that the prices could be completely random and have market symmetry and perfect market geometry over and over and over. There's no way if it was a random move. So my belief is that I don't know where it's going tomorrow or the next day. I can give you an idea, but it's harder to know. But okay, I'm sorry, I had an interruption and I've kind of lost my train of thought. We're talking about, is the market random or not? I don't think it's random. I think that if you learn to read this chart, first of all, there's price movements move under a set. I call them a set of rules. It's just like gravity. There's a set of laws for gravity. There's a set of laws for rules. Now, gravity's probably 100%, but our rules for price movements probably only 90%, maybe 95%. It won't always be correct, but 90% of the time it is correct. And if you can be right, if you can get price movements right within 90%, do you not agree you've got an edge? It's much more than 50-50, so it's not gambling. I think you can get a 90% edge. I think you can trade to a 90% win rate. I believe that. I've I've seen other people do it. I'm not just me. I've seen other people do it. And so I know it's possible. We've got students that can do it now. So it is possible. So I believe there are sure things. There's some trades that I can almost guarantee you are going to be sure things. And those, to me, those are the ones I mark blue and red. I like the green ones, but I'm not convinced they're a sure thing. And so I mark them green. But I still like them. They still fit our entry criteria. So, but that's my opinion. Don't believe me. Get your charts out. Get on the simulator and prove me wrong. Prove it to yourself. Don't believe me. Prove it. Either prove that I'm wrong or prove that I'm right. It's easier to probably say I'm wrong if you're taking the wrong trades. But if you learn to understand the rules of price action, which I give you a whole list of them, they're in that manual. I talk about them every day in this video, so you don't even have to buy anything. They're all over the website. It's harder to put together, but if you go there, and you can go to my website and get everything we do for free. It's just harder to put together and probably take you more time. Or you can spend $100 and you can get all the rules in one spot. Easy. And so there's a set of rules that prices tend to follow. Kind of a law of averages or whatever. They tend to do it consistently over and over. You get a good strong trend, you tend to get a break and a move to the new extreme. Sometimes people don't even understand what I'm saying there. When you need a consistent close outside this trend line, but even then, prices are still going to try to go higher at some point. You don't know when. Sometimes they'll get a couple of legs. Sometimes it might correct a little bit, but eventually it'll still go higher and attempt to make a new high. Here, it did it right away. It made a new high, and then that trend was over. Then it corrected sideways before going down, and then we started a new trend right here. Here we had a trend working down. We might have had a close outside here and a new low, but is that convincing? I'm not sure. So we tried it again here, and we didn't make a new low. We just went higher. So, but maybe that's because the range won out and the trend was a secondary pattern. Or maybe there really was a close outside here and a new low. But you can usually, sometimes it's harder to spot than others. This one's pretty easy. You get a close outside and a new high. That one's pretty easy. This one right here, you get a close outside and a new high. That one's pretty easy. And it's really a little steeper than that, and it's probably a much more obvious close outside than what I really had drawn there. But you can see it working up here, working the midline, working this trend line, and then you get a close outside here and a new high, and it reverses. Exactly what I teach you that prices try to do. And you'll see the same thing to the downside. Prices will have a trend coming down, just like so. Guess what? You get a close outside, two swings to a new low, and it reverses. Got a trend working up here. Close outside, two swings to a new high, and it reverses. I can show you that over and over and over. And when something works that often, do you not believe you can find an edge? Prices are not random. It's not easy to know exactly what they're going to do, but I can, well, actually, I take that back. You know what they're going to do, but your timing is the issue. Let me go back to one of these. Let's go back to this one. So like right here, you get the break, close outside, and two swings to a new low. The hard part is knowing when this correction is going to end. So that's why you draw your micro trends as well. Because it will help you to determine when you get a close outside and a new high. This one, you got two swings up. It really didn't help you there. And you didn't get a setup anyway because this is your signal bar and it doesn't qualify. You can't enter on this bar. But guess what? Then you get a lower high. Well, you got more confidence now that you're making lower highs and lower lows again, and maybe you jump in and go lower. Here, let's go back to this one. Here's a good one. You're working up, you get a close outside, and you get those two swings to a new low. And the question is going to be, there's a second entry short right there. There's your break, close outside, two swings up to a new high. How do I know that's going to be the end of it? And it turns out it's not. You get another move up. Well, how do I know that's going to be the end of it? I don't really. But I do see two swings here, and if that was a good signal bar, I'm probably going to take it because I know I'll get a scalp. There's plenty of room back to the EMA. Same thing here. Two leg, you get a first entry, second entry. That's a second entry short, way away from the EMA. Even if it's going to push higher again, which it tries, I'm going to get my scalp out of it. So that's another reason we know we can get the 4 ticks. So we have a set of rules and we follow them for a reason. When you start trying to add 4 ticks because you think you need to get more because your stop's bigger, I'm telling you, where you put your stop is more important than where you enter. I'm sorry. Where you put your stop is more important than how big your stop is. Let me re-say that because I don't know why I said where you enter. I was thinking, I'm thinking too much while I'm talking here. Where you put your stop is more important than how big it is. Look at the trades I marked here. I showed you why we entered all of them. They all follow our rules, every one of them. And if you put your stop below that signal bar, you don't get stopped out. I showed you another trade right here. If you put your stop above that signal bar, you don't get stopped out. Showed you another one here. You don't get stopped out. I showed you one, a possibility. This one's not nearly as good, so I marked it green. And even though prices went higher, guess what? You didn't get stopped out. Here, I like this trade. Took no heat at all. You didn't get stopped out. I mean, you would have been scalped out of this and didn't even take a tick of heat. It might have taken 1 tick of heat for a second. And I showed a possibility here. And it does get taken out, but you would have scalped out first. So if you follow the rules, you got another winner, even though this isn't a sure thing. Same thing here. This one never took any heat at all. You wouldn't have got stopped out. Here's another one I like. Not perfect. Look at the heat. You did take some heat on this, but guess what? You didn't get stopped out. This thing broke higher, and I don't know how far it traded back. It might have already traded this far before it broke higher. Maybe it only traded back and you took heat here, but you could have taken heat all the way to here. But guess what? Even if you did not get stopped out. I got a trade marked here. Wouldn't have got stopped out. And all of these are following the rules. I explained every one of them to you. Same thing here. You wouldn't have got stopped out. Took very little heat at all. Right here, took very little heat. But if you put your stop in the middle on some of these, guess what? Or 8 ticks back, which is back used to, you could do this with the 8 tick stop rule. You could get your stop where it belonged, and you might do it in 4, 5, or 6 ticks. But now you can't hardly do it in 8. Every once in a while, we'll see one that falls under the 8 tick rules. Here's another one. Took no heat at all. And you were out. Comes back. There's another setup. I explained to you why we liked it. Met our rules. No heat at all. Here's another one. No heat at all. Now these are much more advanced, but look, none of them take any real heat. None of them. Even this one didn't take any heat. So when I tell you that you have to trust the process, you have to trust the strategy. If you understand it and know how to trade it, but you have to follow the rules, because if you don't, I can show you where you'll get stopped out on a good trade that would have worked. So I hope that's helpful to you. I didn't mean to get into that. I really don't use the YouTube, these chart lessons, to teach what we do. I use them to go over the trades so people that are trying to learn the strategy can compare their work to mine and learn to find the trades at the end of the day. You want to do it on your own and then come back and compare your work to mine, and you'll see the trades that set up during the day following our rules that met the criteria that are good setups. That's all I'm marking. I'm not marking necessarily. I may or may not have taken any of these trades. Some days I don't even trade anymore. I don't have to trade every day anymore. I trade most days, take a trade or two, but some days I don't trade anymore. I don't have to. Most most days, definitely Monday through Thursday. Sometimes on Fridays I definitely don't trade as much anymore because I come in, I try to get the mid morning chart up, I try to read the emails, and I try to get out of here by noon. So unless there's a really great setup, I may not trade that day. But most days I'll take at least a trade or two. But I don't have to, and I don't trade every day anymore. I've made that abundantly clear multiple times recently because I want to be upfront and open about what I do. So I don't have to trade every day anymore. I don't need to. If I need, but I love trading and I'm addicted to it. And so if I'm not trading, I'm trying to record a video for you guys, or I'm trying to answer some emails and help you guys to learn more and to figure out your mistakes. And that's just what I do here because I love this stuff. I'm addicted to it. I have that kind of personality that I'm a workaholic. Whatever I commit myself to, I go overboard. And that's really what led me. Thank God that I was like that because that's what led me to trading because I was working myself to death for somebody else in a corporate job and they owned me and I was missing out on my family and my kids growing up. And man, once I was able to quit that job and only worry about trading, and I can take off when I want. I mean, I said this the other day. How many people could take off their job for a month to go to Antarctica? Most places would fire you. They'd say, you can't leave for a month. I'm sure there's some people that have a job that been there long enough and are good enough, they'd probably let you leave for a month. But when I had my corporate job, I couldn't take more than five work days at a time. I got 3 or 4 weeks a year by the time I left, but I could only take 5 of them at a time. If there was something special, my boss might let me take a week and a half, but anything more than that, I couldn't afford to take because when I came back, I was swamped. And, my job might be in jeopardy because things will go bad. So, but because I'm a trader, I can take off the whole year if I want. There's nobody says I can't. You guys would probably hate me, but nobody says I can't take the whole year off. And I guess since I'm on my soapbox, I want to address one other thing. I had another conversation with a trader. I used the analogy of this was similar to playing a musical instrument, and I think maybe at least he missed my point. So I want to circle back to that, as Jen Psaki would say, if you know who she is. Let's circle back on that. But let's do it now, not next week or tomorrow. Let's circle back on that right now. Um, I've had people that play musical instruments agree with me that says I'm right. But I had a trader today, and I know this trader meant well, and they weren't trying to be disrespectful or necessarily even trying to disagree. But I think they missed my point. They said that they didn't agree with that analogy, that they were a violinist or something, and they didn't quite agree with that analogy. But again, I think that trader missed my point. And my point is, I mean, this trader's trying to say that, yeah, you need somebody to show you where to put your fingers and how to read the music. And I agree with that totally. You have to learn the strategy and understand what we're trying to do and all that first. When I say it's like a musical instrument, I mean if you want to play a musical instrument professionally, how do you get there? First, you have to learn to play the musical instrument. Yes, I agree with that. So first, to be a professional trader, you've got to learn our strategy and understand what we're doing and how to find the setups. So that's you got to do that first. But that's what the videos are for. That's why I have all those videos on how to do each step of this. And I mean, sure, it would be better if I could sit down one on one with you, but we all know that's not possible. So the videos are the next best option. So you got to sit down and do all that on your own and learn where to find the setups, how to find the setups, what we're expecting, learn the rules, the laws of trading. You have to do all that first. But once you learn that, the way you get better is through study and repetition. And you can't tell me that playing a musical instrument, if you want to play professionally, you got to play every day and get practice over and over and repetition and repetition. I mean, anybody can learn to play and pick on a guitar, or learn to play and pick on a piano, or learn to play around with a violin and make some tunes and some music. But if you want to play professionally, how do you get better at that? It's like any skill. I don't care what skill you name. If you want to hit a baseball, if you want to throw a baseball, how do you get better at it? Through practice and repetition. And that's the point I'm trying to get across is that the way you do that is not come in every day and try to trade live or get on Apex and try to take a couple of trades every day. You may get some practice there, but that's not the kind of practice you need. You're trying to be a professional here. The only way you're going to beat professional traders is to be as good as them. So you're trying to get to the next level. Otherwise, you're just spinning your wheels. You may learn to trade and you may learn to do every bit of this, but can you do it in real time against other professional traders? That's why 10% of all the traders make 90% of all the money, and the other 90% are losers, because only 10% of them are really good enough. The rest of them are just throwing darts at a board. They're gamblers. The other 10% are skilled traders. They may not even say they read the chart or they are price action traders, but I guarantee they understand price movements. They understand those laws of the movement, probably just through doing it until they figured it out. Some of them may accidentally tell you, or may actually tell you, hey, I'm a price action trader. I can read this chart. I understand price movements and I know what to expect. But some of them may say, no, I don't know anything about price action. But if they're winning traders consistently and professional traders, they understand these chart movements and how to read this chart. Trust me. That's the only way. There's no indicator. There's no holy grail. Anybody tells you they got that, run from them as fast as you can, because there's no such thing. The only way you're ever going to make money consistently is to learn to read this chart and understand these price movements. And I'm a firm believer of that. And so the way you do that is through study and repetition. So get on the simulator every day. Don't try to trade live, because you can't take enough trades and get enough experience. Get on the simulator, trade every day, take every trade. Don't worry if you're right or wrong. Just take every trade that you think meets our criteria, and then at the end of the day, go back and study them. Each trade, even the ones you got right, study them. Make sure that you didn't just get lucky. Make sure it meets our criteria, because it's easier to see this after the fact than it is in real time. That's the first step, is to learn to see it after the fact, and then you'll slowly start to see it in real time. I can remember distinctly, I'd start to see this stuff after the fact. And I said, man, why didn't I see that in real time? I wouldn't have made that losing trade. I see it clearly here. But if you do that every day and you study your trades, eventually you will see it in real time clearly. And that's the point I'm trying to make. The only way you get better at this is through study and repetition, doing it every single day. And you have, because you can learn the strategy by watching the videos and studying, and you can get better at that way. But you're never going to get where you need to be until you get lots and lots of screen time and experience, because that's the difference between, it's just like somebody that knows how to play baseball and somebody that's a professional baseball player. Their skill set is much better. Of course, to be a professional baseball player, you got to have some athleticism, be born with it. But so some of that, but even trading, some of this you might have to be born with. Some people cannot see these patterns on this chart. They just can't do it. And those people probably don't have the skill set. So even in trading, there's some part of this you got to have the skill set. Because you'd be surprised. I've had people doing this for years, and they cannot find these channels and these ranges. They can't, no matter how hard they try, they can't see them. So obviously their brain, there's the way they're wired or something, they don't see them. And then the other part is you got to be disciplined. So maybe you're one of these ADHD people and you can't sit still and you can't concentrate on anything long. You're probably going to struggle to be a trader because you have to sit here and be monotonous and pay attention and be zeroed in on what these prices are doing. And if you're not, you're going to screw up. So even with trading, I'm sure that some of you have to be born with some of these skills. Thank God I had this. Obviously, I had the right skills to see this stuff, and I'm blessed, and I'm appreciative of it. Would I rather be a professional football or baseball player? That's my two sports. I would have loved to have been one of them, but I wasn't. I wasn't. I mean, I was a good athlete, played all sports in high school, played a little college ball. My son was the same way, but we weren't good enough to be professional athletes. Maybe I didn't try hard enough. Maybe if I'd have tried hard enough, I could have kept trying, but I knew that I just probably didn't have the skill set. But I found something that did work for me, and that was trading. So anyway, I hope that makes sense. And so I do believe still that it's very similar to becoming a professional at playing any kind of musical instrument. You have to hone it. You have to practice it. It's just like being anything professional. You have to practice practice and repetition every single day. Coming in here and trading and trying to take 2 trades, 3 trades, and then closing up and going home. You may have success. You might be good enough to do that already, but you're not going to continue to really improve until you. That's one reason I like doing this chart lesson, because it forces me every day to come look at the chart and study this chart again. After watching, I watch the chart when I'm sitting here at my desk, but I might get distracted and get away, and I don't see every move all day long, especially in the afternoons. So I have to come back and restudy that even closer because I don't see that in real time. Most of these I've already seen them and probably already marked them as the day's going along. And some of them I might have taken, but some of them I may not have, and I may not have even seen the price action for them, so I have to come back and study it and look at it. So by doing this chart lesson every day, I'm in essence studying my chart every single day. After 25, 30 years, I'm still doing that. And I promise you, I still learn new things every day. I get better at this. So compare 30 years of sitting here for 6 or 8 hours a day to whatever time you've got. Most of you have. Most of you are lucky if you've got a year or two. Some of you might have 4, 5, 10 years, but you're probably looking at the wrong things. You're probably chasing that holy grail that doesn't exist. Somebody sold you this, promised you this would work, and somebody else sold you an indicator and promised you that would work, and somebody sold you, and they probably charged you 10 prices for this crazy stuff, and it doesn't even work, and it will never work. So anyway, this is almost going to be an hour video, and I apologize. Some of you like me on my soapbox, some of you don't. But this was all important stuff, and it's all a learning opportunity. And some people will say I'm full of what, but I don't care because I know better. I think anybody that thinks I'm full of it are the ones that are really full of it because I know. And that's the truth. And that's the reason I'm not crazy about Discords. I'm not saying you can't learn anything there. What concerns me about a Discord or a forum is that you have people in there that are going to tell you they're profitable and tell you how good of traders they are, and they're going to throw all this BS about you about that's important, that's not really right, because they don't know any better. They can parrot it because they've heard it and they've been trying to learn it for years and years and years. And that's my concern with those places. Because if somebody is really can make money trading, you can make more money in minutes than you can make teaching in hours. So why would they go in there? I'm just telling you, experienced, really good traders. They may say they are, but that doesn't mean they are. Why do they spend their time going in there when they could be trading and making real money? I mean, I'm sure there's some guys like me that love it so much that they might go to these places, but I promise you, they're a rare bird because most of them make their money, close up shop, and go play golf or go do what they like to do. Go fishing, go hunting, go surfing, go whatever. So anyway, I hope that's makes sense. And I'm not trying to beat down anybody's Discord or beat down anybody that hangs out there. I'm just telling you my experience, and that experience is probably, I'm sure there's an exception to everything I said, but I'm mostly right. And one day, if you make it, you'll come back. And I mean, I can't tell you how many people come back to me and say, Mac, I don't know why I didn't believe you. I don't know why I didn't listen to you. You were right. I mean, I think people come back to me all the time and tell me if I'd have just done what they told me to do, they would have shaved off years off their. And most of them are the ones that start taking every trade, sim trading, and studying every trade. Those people always come back and they tell me, man, that I learned so much so quickly that way. I don't know why I never did it before. I don't know why I didn't listen. I heard you say it a million times. But it's just human nature, and everybody thinks they're right, and I'm kind of jaded. I just think I'm right, and I think because I've proven it though. And if you disagree, that's okay. There's another strategy out there. There's another. It may not be as good, and you might be able to go out there and do your 1-to-1 ratio, but you're going to have more losers. I promise you. I just showed you where you'd have a loser when we'd had a nice winner and a runner. But anyway, this is almost an hour. I'm going to wrap this up. Sorry for dragging it out so long. You didn't have to stay and listen, I guess, if it wasn't interesting to you, you didn't think you were learning anything. But sometimes I feel bad for making the videos too long. So, but anybody can drop off whenever they want. And some people like to hear what I have to say, and some people don't. So, I hope it was helpful to you, and I hope maybe you learned something. And if you didn't, then good trades to all of you. I'll see you tomorrow. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.